Sources say Shein is stepping up preparations for a London listing. That's according to two people with knowledge of the matter. Welcome to Market Insight. I'm Leah Mishkin. So the IPO could be one of the largest globally this year if it materializes. The China-founded fast fashion giant may also pursue a secondary U.S. listing. To help unpack the news, we have Laura Foll, portfolio manager at Janus Henderson Investors. Laura, welcome. Thank you for being here. Shein was hitting red tape in the U.S. Do you think the company will have an easier time going public here? And what kind of impact do you think the company would have on the FTSE?
I think it's encouraging that we're seeing signs that some companies are thinking of listing in the UK. I think anyone that's been following the UK market knows, and I think we'll go on to talk about that, we've seen quite a few takeovers in the UK market. And at the same time, we haven't seen much coming in the other side. We've seen very limited IPO activity, not just this year, last year as well. So it's encouraging to see some large companies thinking about coming here for a listing rather than say in the States.
Right, and to that point, I was reading in the Financial Times today that a whole article on that. London listed companies are in big demand. Anglo-American, for example. What do you think is causing the sudden buzz?
Just as we're recording this, Anglos has rejected another offer by BHP. I think London PMs, London equity fund managers have been talking for a long time about the fact that UK valuations are lower relative to peers. And that's not in any one particular sector, that's pretty much across the board. And I think we're really seeing that coming through in takeover activities. And again, it's not just in only one particular area. We've seen it in smaller companies, medium-sized companies, and now increasingly this year in larger companies as well. We mentioned Anglo-American. There's also been a bid for IDS, which is better known as Royal Mail. It recently changed its name. We've seen DS Smith have multiple interested parties. It's agreed to take over by International Paper. So it's really moved up the market cap scale in the UK this year to larger companies as well. But I think it really just reflects that valuation discount at a time when actually the UK economy seems to be showing some signs of economic momentum. From a low base, it has to be said, but things like the GDP data last week show that the UK is now moving out of recession. I think that just adds to the feeling that if you can say valuations are low and you can also say that the economy seems to be showing some momentum, I think that's an encouraging picture.
Right, and the head of UK investment banking at Bank of America spoke about the, quote, frustration behind the scenes with valuations, he called it. And he said that the market is not properly rewarding UK companies. That's
certainly how it feels as a UK fund manager over the last really since Brexit, so going back 8.5 years now since that Brexit vote. And it feels like since then there's been a valuation gap that's opened up. And you can show that very clearly that the point of valuation gap is that mid-2016 point in time. And then that valuation gap opens and just hasn't closed in that time period. And I think the thing that stands out to me about that is we can talk about the UK domestic economy. And as I said, I do think it's showing some signs of momentum. But most of the UK equity market is overseas. If we look at the FTSE 100, roughly 3/4 of the earnings are overseas. And then if you see the valuation discount, that feels more illogical because we can debate the UK economy and people have different views. But actually, if most of the earnings are overseas anyway, then that valuation discount makes less logical sense.
And then, of course, we have US CPI figures out this week. How are you expecting the data to impact the markets, or will it have an impact at all?
It always does have some impact. The market almost excessively focuses over that US CPI number. So I think that really will be the dominating factor for this week. I think the US economy does seem to be almost the opposite, I would say, to the UK economy. The economic data seems to be rolling slightly the other way. We've had slightly softer payrolls figures. Things like the City Economic Surprise Index seems to be going down a little in the States. I think people will be watching that data very closely with the risk in the back of people's minds that we might be heading to a stagflation type scenario. And what I mean by that is that month-on-month US CPI number has been pretty stubborn. And I think people will look and hope that will show some signs of coming off a little so that we can look to move into a path of easing rates. The expectation now is around September. It has varied a bit, as we've all seen over the course of this year. I think people will really hope that US inflation number shows some signs of easing, given the economic data does seem to be rolling a bit at the margin.
Laura Foll, portfolio manager at Janus Henderson Investors. Many thanks for your thoughts. And that is Market Insight. Don't forget, you can watch more videos on Reuters.com.